Okay, yesterday we saw two equations. One is FV equal to PV bracket 1 plus K exponential n. And another one is net present value, and PV equal to the sum of present value divided by bracket 1 plus K capital R exponential T minus initial potential initial investment. And there are two decision-making criteria. If the NPV more than 0 or more than 0, the project you can accept. If the value less than negative, less than 0, for example, this example, you have a negative $1,278. So it's a not, you reject the projects. Okay. Next, we start to do some exercise. Find the net present value formula, NPV. All right. So you're given, let's say you have a General Electric company. You have the opportunity to invest in two projects. So you as a project manager for General Electric, so you have two projects. Project A, you need a minimum of $1 million, which will give a return of 30,000 each year for 5 years, right? So project B require investment of 75,000, which will give you a return of so and so. There are 5 consequences income for the next 5 years, right? Then 100,000, 150, 200,000, 250, 250. Then calculate the net present value, which can be used to decide which opportunity is better and should be invested. Okay, so this is an exercise. So you should be using the second equation that we mentioned just now. Okay, so do your exercise. Build the table. All right. So you should have table A, table B. So you have your K value, much, then your initial investment. Okay. Then you have your table. Number, you have 5 years, so you have 5 rows. 1, 2, 3, 4, 5. Then you have return. So you fill in the blank. Then you use the equation. This one. Inside here. Then after that, you get the sum of the number. And then you calculate NPV. Same with project B. Both also 5 years. This number of year. Okay. So A, you have 1 million. B, you have 75, 750,000. Of course, when they come to your test 2 or final exam, put in the unit. Okay, this is just a draft calculation. Okay, so return for the then okay, this question, the care value is not given, okay, but it should be given. So you're using the interest rate or the K value is 10%. Okay. The question got given no, right? Not given, right? So K is not given, so just assume 10%. Yes. Yes. This is a tutorial question for you guys lah. Okay, let's say in the final exam, you didn't see K value. You just assume lah in your answer, right? Assume K equal how many percent? Just in case lah, if the question we overlook you just assume lah. Okay. But the K value, each company have their own secret They don't tell the value, the K value to outsider. Okay. Okay, start doing your work. So K is 10% for both case. So the project A, every year you have 300,000. You have 300K, 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 300K. B, you have 100K, 150K, 200, 250K, 250K. So what is the first value for this column? This box. You are finding FV 1 plus K E 30. 300. What's the value for the first one? What? 16. Huh? 16. 186. Okay. 186 point. For how many? 28. Okay. 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 How you get 118? How you get 186.28? Huh? 1 plus how many? Okay. Power? No. Your K is here. Sorry, your T is here. Your T is using this value. This one use value, this one use this value, this one use this value, this one use this. So what's the value? So is that? Uh, huh? 272.73 lah. Then you do the same for others. Okay. Second one, change your T to number 2 for 2 second year. Huh? 24793. Okay. The third one, 225.39. Okay. Later we check if our answer correct. And 4. 204.9005. 186.2728. Okay. Then you get the sum. No? This one plus this one, this one plus this one, you get the total. Huh? 137.23. So you take this number minus 1 million. So you have positive 137K about there. Okay, net present value is 137. Let's check the answer whether correct. Okay, so your presentation should be roughly like what I write on the whiteboard or the one that's on the screen here. Okay. Okay, this is the second one. Okay. It looks at the first one. So again, how you calculate? You take this one, initial the cash flow, get the cash flow or the future value of 300K divided by 1 plus interest, multiply exponential the year. Let's check the answer. 272. Correct not? 272, 247, 225, 204, 186. Okay. So the answer is 173K, point something, point something. So this one is a million. So million, when you reach million, you have 6 figures, right? So it recommended your calculation, you have at least six figures, because you are in million. So this is just a rough estimation that I'll write on the whiteboard. Okay, yeah. So when it comes to your test or final exam, it depends on the unit. For this example, it's million, so you have a minimum 6 digit in your answer. Okay, 6 digit. Okay. If your question is 1 million, I won't go very deep until the last digit. Okay, because it doesn't make any difference. The important is that you're able to look at the number and then ask yourself, so what, right? You need to make decision whether you can accept or not accept. You have to write the statements, right? NPV more than zero, more than zero, you can write a very short statement. NPV more than zero, accept this project, or which one is better, right? So less than zero, do not accept these projects, something like that. You make that statement. So you do the same for the second one, right? For the second one, so I will not go there lah. So at least you know what to do already. You do the same, right? You do the same. Okay. So for the second project B, you will get for the first year, you get 90K, 123, 150, 170, 155. Then you add all this number, you minus the initial investment, 750,000, you get a negative 58. So one case you get positive, one case you get negative. So you write that statement, NPV more than zero, accept the projects. NPV less than zero or negative, reject the projects. Okay, you write that one. Okay, so in this case, the answer for your revision is that you write negative 18.877K. Right? Then you compare the two. So in this case, project A will be better compared to B. Can nothing complex here. Okay. All right. Now, I think the last portion of chapter 6. Today we conclude chapter 6 and go into a little bit on chapter 7. We have 2 more chapters to go, right? And then, or maybe tomorrow, we have a replacement class. So tomorrow, go. Okay. So what is IRR? IRR, internal rate of return. Internal rate of return, there's another formula, right? It's formula. So what is internal rate of return? You use the formula that you calculate for NPV. To cut short is that your NPV equals 0. The left-hand side equal to 0. It's like your engineering, static and dynamic, the equilibrium equation. All the force equals 0. In this case, your NPV equals 0. Okay, so this is the statement lah. So if the question asks you what is the definition of internal rate of return, you can straight away write this equation and then you write NPV equals 0. But you have to explain what is FV, 1 plus KT, what is K, what is II. Okay, you can either write this equation or you can write the text here. So IRR is a discount rate where the present value cash flow exactly equal to the initial investment. Because if the left-hand side equals 0, you move either one to the left or right, they will be equal. So means this component will equal to this component. This one you move here also positive. Okay, so this the meaning lah. Okay. So again, this IRR methods basically they are trial and error solution, which is it will, since it's a trial and error, it's a very lengthy, takes a lot of time to do. Okay, but however, nowadays we have a software. You can ask the software to do trial and error for you, so it can test all possibility for you, and then it will give you a chart, or there's a prompt you a message, like what which attempt you will get the possible equal 0. Okay. So in this case, for example, project A, you get IRR 10%, NPV equal to this one, right? So okay. So the last 32% you get negative value. So how to read this table is just that for in this example, for initial 5,000 investment IRR with 10%, you will yield an NPV of 3,700 700 something. So how to get 3722? You use back the equation that we learned just now, right? You use the equation to calculate that one. Okay. So then you try an error. You use second guess. You try greater 10%. Generate 0 for this one. You keep on trying the value, trying the percentage until you get negative. Until you get 0, near to 0. Okay. In the software or simulation software, we call it iteration, like first iteration, second iteration, third iteration, and so on. Yeah. So to form a table, when you reach the 31% of investment, you will almost near to 0 already, right? So therefore, the cost of capital were 10%. This would be excellent investment. So this just tell you that it just tell you that the return is good if it's 10%. Okay. So if you increase your K value, the K value, if you increase the K value, then it will drop until 0. Okay, the next one is about project financing. So project financing, we talk about risk, right? So as a project manager, you also look for as a general view of the projects. So what are the financial risks? You will need to consider the project versus corporate financing. So corporate financing means the whole company operation cost, or then project means project, your own project's financing. So it's a different P&L, profit and loss balance sheet. Use of corporate bonds, stock, zero coupon bonds, and all this. So sometimes the corporates have some financial instrument where they mix up the transaction. Okay. And so on. Okay. First is financial risk. Second is a development risk. Development risk is sometime when you develop some technology pop up and so on. If you're in the computing, then or gaming technologies, the graphic card technology is getting better and better. So you need to catch up with that. So first, financial risk. Second, development risk. The third one is political risk. The fourth one is organization risk. Then the next one is execution risk, and so on. So there are 1, 2, 3, 4, 5. 5 risks, 5 kind of risks. But the rest you read. Okay, let's do a little bit of quiz. Which of the following is a valid way of evaluating the financial feasibility of the projects? Return on investment, net present value, internal rate of return, all of them. What do you think? Okay, it's all. So, okay. 3 common classification system for estimates includes all the following except. The word is except. Which are the common classification system. You learn about parametric, right? So the second one, quick and dirty estimate, we don't learn that one. Okay. The most accurate estimate is which one? Parametric, analog, or engineering estimate? Engineering estimate is the most accurate one, right? Which of the following is considered to be bottom-up estimate rather than top-down estimate? So this one is about your WBS. WBS, we have in our class we have 6 level 1 to 3, 4, 5, 6. So which one is bottom-up? Which one is top-down? So considered to be bottom estimate. Bottom estimate from the level 6, then go up. Parametric, engineering, or none of above. So it's engineering now, because it's from the function unit, from the expert. Right? Okay. Number 5, which of the following would be considered as cost estimating relationship, CR? Which would be considered as a cost estimating relationship? Mathematical equation, learning curve, cost quality relationship, or above? What do you think? You can find the relationship between the cost. The answer is all above. We use mathematics equation to find the trend. Learning curve is from the experience. Cost quality is, there's one more relationship. I forget what I said. There's one, cost with something. Okay, look back at the slide lah. Okay, if a worker earn $30 per hour in salary, but the project is charged 75 per hour for each hour the individual works, then the overhead rate is what? So it's how many percent? You pay a worker 30 ringgit, $30, but you charge the project 75. Actually, you're working profit lah. Okay, the overhead rate is 150%. Okay, your cost, your capital is I mean your raw cost is $30, but you are selling at 75. Okay. Yeah. So information supplied to a customers to support a financial data provided in the proposal is commonly called what? Information supplied to the customers to support financial data in the proposal is called what? Called backup data. Of course, this one is not inside my slides, but it's a add-in information for you guys. Estimating pitfall can result from poor define, failure of account risk, using wrong estimated techniques, or above. What do you think? What do you think? What is your answer? Which one? C is correct. Is the correct answer. Or above. So estimating pitfall can result from means you have an error in your estimation. Which one is the possible reason? Right? Poorly defined means you do not understand what you're doing. Also can result to your error. Failure account risk also, because if you don't consider the 5 risks just now, then the numbers in your proposal might not be correct. use the wrong techniques also. Techniques means estimation is wrong, right? So means if you get for example, you get a random data. We'll learn this one in chapter 8 later. So let's say you get a random data. So this is the curvature parabolic periodic behavior, but you estimate using linear equation. So it's wrong. Okay. The source of many estimating risk is what? Poorly defined, inexperienced, lack of management support. What do you think? Or above? If for project management, you don't think too complicated. As long as it's linked to that, then there's the answer. Okay. A project where the scope evolve as work take place is called either progressive planning or a project where the scope evolve as the work take place means you start the project already, but at the middle there's some changes happen. Okay. So which one that you learn in your class? Do you heard about this one, this one, this one, this one? Yesterday we just learned this one. Okay, loading wave. So means you shift the window shifting. That one. The calculation of total cost of products from R&D to operation support and disposal is called what? Which one you learn in our class? Debt, birth to debt, life cycle, summary, depreciation, costing. Which one you learn? This one also we touched yesterday. We learn about life cycle. That's the costing, Our LCC, LCC. Okay, LCC means from the start until you dispose the things. Okay. Okay, with this we conclude chapter 6. Okay.